You a quick spiel. I'm Ashleigh Shim, um, agent at Petra Management Inc. I was originally born in Kingston, Jamaica. I played soccer for their national team for several years. Played professional soccer in Germany and Sweden at the club level. I love Jacksonville, Florida. I've grew up here, moved away for a while, and I've come back in the last couple of years, and it truly is an amazing city. In Miami, I founded and operated a private soccer training academy. So a large part of my background was sports and owning a business, and found myself in real estate, and I love it. So that's a little bit about me. All right, Petra. So, some of you are familiar with the company Petra. For those of you that are not, Petra is a licensed real estate broker and property management company. Our management team represents about 1 million square feet of commercial real estate in Jacksonville, and it's a family-owned business, and they've been in business for about 20 years. So, I primarily do a lot of their leasing. I do represent some other landlords and some buyers, but most of the leasing that I do is with Petra. So Petra, independent of doing brokerage and property management, they also are a family office. So they buy a lot of commercial real estate, and I am one of the primary leasing agents for their real estate. That QR code also takes you to the website. And also feel free to stop me at any moment. I don't want to just talk to you guys for 30 minutes. We'll have a Q&A session at the end, but at any moment, just unmute yourselves and ask questions. So at Petra, primarily we help clients lease, buy, and sell commercial real estate. Um, what we do with our clients from start to finish helps them evaluate properties with more confidence. We can give them detailed market reports if they're buying. We have access to CoStar, which it's a couple $1,000s a year to use. So it's a very, very sophisticated software. And we work all throughout the Jacksonville area. Primarily, I would say downtown, the beaches, south side, I would say are the spots that we're at the most. But we can work in any part of the city. Since today will be about leases, we're going to talk about how to navigate the lease process efficiently, and hopefully, you can walk away with some things that helps you or your client avoid common mistakes. So this is going to be very basic property types. There's a lot of different property types, but the three that we focus on at Petra are industrial, retail, and office. Industrial, you can think about like warehouse, office type space where manufacturing, distribution, or storage happens. Retail, retail is your Wawas, your Chipotles, your Starbucks, anything that's selling a product or service. Gyms, office, administrative operations. You can think financial services, insurance, tax. So those are just some basics about property types. So I generated this list of questions, and these are questions that I get a lot. If you have a question, also you can feel free to put it in the chat. Um, we won't answer all of these today, but these are just some common things that people are thinking about when they are leasing commercial real estate. They want to know how much it's going to cost them over the time period that they're leasing. They want to know key lease terms, like what does triple net stand for? What does it mean? And what are the responsibilities for the tenant in a triple net lease? What's CAM, common area maintenance? What do they need to know about zoning? What due diligence should a potential tenant perform before leasing a property? So kind of like when you buy a house for the first time, or buy a house in general, right? You don't just sign the papers and you're done. You have an inspection period. You make sure that your house the house isn't falling apart before you move in. There's something similar like that with commercial leasing. There's not really an inspection period, but I strongly advise all potential tenants to do their own inspections prior to moving in, especially if it's a triple net lease. How to determine fair market rent for a commercial space. For example, if you're a landlord and you own an office building on the south side, you can't just charge whatever you want to charge, right? You have to look at what is in the surrounding area, what other spaces are charging, what people are already paying for rent, and then look at your, what you have to offer versus other properties. Do you have more amenities? Do you have more parking? Do you have specific and special things about your property that would warrant you to raise the price a little bit on the rent? And then other questions like, how do landlords qualify tenants? What are landlord and tenant responsibilities typically? And what type of property should you lease for your business? So for example, if you're a gym, you're not going to go rent an office space in a high rise downtown, right? You're going to look for probably retail storefront. Or if you're a specialized gym like a CrossFit gym, you probably would look for warehouse type space. And then I'm not going to go through all of these, but just go through a couple of them. And I can also send you guys this PowerPoint. So if that's something you want, just let me know. And this is being recorded, so um, you'll have access to this after we're done. So the three types of leases: triple net lease, modified gross or MG, and full service lease. So a triple net lease, that means essentially that the landlord is paying upfront for the property maintenance, property tax, and property insurance. And then they will charge that back to the tenant in a form of rent as a separate fee. So you have a base rent and then a triple net expense. For example, we have we have a property in Springfield. We have a lot in Springfield, but we have a property in Springfield right now, on North Main Street. The one that we did with the brokers open that some of you guys were at, and at the open house at 1729 North Main Street. That's a retail storefront. It is going for $14 per square foot plus $2.25 per square foot triple net. So that 225 is what the landlord has calculated that costs him in insurance, taxes, and maintenance for the year, and he breaks that down uh, into a figure that is represented per square foot. So whenever you see a base rent in a retail property, always ask the listing agent or listing broker, what is the triple net fee? Because $14 is different than 14 plus $2.25. Make sure you get capture the entire rent so you know the actual cost of the property, or what it costs to lease the property. Modified gross lease, it's kind of like a hybrid between triple net and full service. So you have some of the responsibilities for landlord and tenant they share. Really, in a triple net lease, the tenant is responsible for pretty much everything except for structure and roof. Full service lease, this is typically found with office spaces. So traditional office, kind of like the example I gave earlier about the high rise building, a high rise building downtown. Those are all going to be full service leases, meaning the landlord pays for everything and the base rent is all inclusive. Lexi, who I think is on and at Northwestern Mutual, she's in a large traditional office space. I would assume that her or most of the leases in that building are full service or some kind of MG lease. Um, and then landlord control. So the reason why tenants would want a triple net lease, some tenants would want a triple net lease, even though they take on all the responsibility, is that they can have control over the property. For example, if I run a restaurant and my toilet breaks in the busiest part of my dinner hours, right? I don't have to call the landlord and wait X amount of days for them to get back to me to send somebody out here. I'm going to call my emergency plumber person that I know, and they can come out here within an hour and fix my toilet, so my restaurant can keep running, so my business operations can keep running. So that's an advantage to having a triple net lease where the tenant is in control over the property maintenance. A full service lease, tenants don't really have control over what goes on in the building, the but it's very low maintenance of what you're doing in an office space anyway. Most of it is administrative work or operational work. And some offices, you don't really have clients coming in and out a lot. So those are just some examples. Key similarities across all lease types. So even though all leases are different, there are some similarities about them. For example, most commercial leases are between 3 and 10 years and have renewal options. Some of the bigger companies like Starbucks, Chipotle, Chick-fil-A, they don't own their real estate. They lease on a triple net lease. Most of those bigger corporations, they'll look for like 15 to 20 years, like Advanced Auto Parts, those kinds of companies. But typically for smaller businesses, you're looking between 3 to 10 years. All lease types, regardless of if it's triple net, modified gross, or full service, you're gonna have a security deposit requirement, and that's gonna be paid upfront. Most landlords do first and security deposit. Some do first month's, last month's, and security deposit. It just depends on the landlord. Assignments and subletting, it depends on the landlord. Again, like a lot of these things are dependent. And so that's why you have a real estate agent to negotiate these terms on your behalf. Some landlords will allow you to assign your lease to someone else and have them take over the payments or sublet to another business. And then others are strictly against that. It just depends. And then an LOI. So, what is an LOI? An LOI stands for a letter of intent. So it's a letter of intent to offer. It pretty much just outlines what your client wants out of the lease agreement, and you propose that to the landlord. You list all of the obligations there and what the tenant's going to be responsible for, how much they're going to pay, when they're going to pay, and all that stuff. And you do all the negotiations in an LOI, and it just makes the lease draft a lot easier. So an LOI is non-binding, meaning both parties can walk away and nothing happens if they don't want to continue to a lease draft. But it doesn't mean you shouldn't take an LOI seriously, right? An LOI means that you have a serious interest to offer on the property and you intend to go to lease agreement. And then in the LOI, these are some of the things that you're going to see. I'm not going to go over all of them just for time's sake. But you'll see outlined who's responsible for the building maintenance, the exterior maintenance, interior maintenance. The landlord on a triple net lease is responsible to maintain, on any leases, is responsible to maintain clear title to the property. They file for property taxes. On a triple net lease, the tenant will pay those property taxes and pay the building insurance premiums. And then in terms of large maintenance items, again, depending on the product, like office is usually full service. So tenants aren't responsible for replacing an HVAC system, right? But if I am a restaurant and my lease is for 15 years, then on a triple net lease, I'm going to be responsible for all of the HVAC maintenance. Just one example. Key tenant considerations. So these are things that tenants should think about before signing a lease agreement. And I would even say before even submitting or moving forward with the LOI. Get a property inspection. Obviously, again, for an office space, that's full service, meaning the landlord is responsible for paying your utilities and paying for the maintenance and everything. And your responsibility is just to pay your rent on time. You don't need a property inspection for that. But if you are, here's an example that I'll share. Mark, who's on this call, Mark Weidman, who's from the Small Business Development Center at UNF, he, him and I are working with one of his clients to open a daycare. And so this client, he didn't get a property inspector to come out, but with his own eyes, he could tell that there were things that were not right with the property, and therefore he didn't end up moving forward with it and went and moved on to another property. The roof was in bad condition. One of the HVAC units was out, and some of the things that you can just show up, and if you just pay good attention to, you don't have to go necessarily spend money on someone to come out. That's not really super common in commercial leasing. But if you are buying a property, I highly suggest you to do that, to hire a commercial property inspector to look at all of those items. You can also ask for recent expenses, especially on a triple net lease. So if I'm thinking, for example, in Springfield, typically Springfield retail has a triple net expense from like $2 to $6, just depending on where on Main Street you're at, depending on the age of the building, just depending on a lot of different factors. But if, for example, I see an advertisement for Springfield retail, $12 per square foot plus $10 triple net. So in my head, I'm already thinking, okay, this is above normal pricing for triple net in this area. I have, I'm able to ask the landlord, hey, can you send me an expense breakdown of your triple net fees or your CAM fees? CAM means common area maintenance. It's essentially the same thing if they're interchangeable. So you're able to look at those things before actually agreeing on a price. If you really want that information, you can find it. Um, Again, understand system conditions. The example I used about the daycare client, we actually went to that property and the roof was fallen in one of the rooms, and so that was obvious to see with the eye. Okay, there's something going on here that's not right. And then budget appropriately. So most people, when they're looking to lease a property, they don't factor in all of the costs that they need. You have your base rent, and then you also have your triple net expense if you are on a triple net lease, which most retail, actually, in fact, all retail you will be. Most industrial, meaning warehouse office, you will be on a triple net lease or some sort of MG lease, which has a CAM fee. You need to budget appropriately. So outside of that, how much money are you going to need at lease signing to pay for first months, last months? And then if you need build out, right? If your floor plan isn't exactly what you want and you and the landlord have agreed that you're allowed to take down some walls and put some different walls up and do painting and do all sorts of things to run your business, right? That's going to be an extra sum of money, so plan appropriately. And then ongoing management, just for your own protection, keep detailed records of everything, conversations through text with the landlord or agent, through email. Just keep a good record of everything. In case something goes wrong later down the road, you have adequate files that you can pull up. All right, commercial lease terms and potential scenarios. So we're just going to go through 4 different potential scenarios of lease structure. So, what is term? Term is a time length in the lease agreement that a tenant and a landlord have agreed to that the tenant is allowed to occupy. So, if I have a 3-year term, that means I'm in that building or in that unit or that space for 3 years. Some commercial leases, I would say maybe even most commercial leases have a renewal period, an option to renew, meaning you have the first right to say, yes, I want to come back to this property and no one can beat me here because I already have a lease in place and I have an option to renew. Um, the first one, basic term, no renewals. So the example here is a 5-year lease, no renewal options. So if I have a 5-year lease, I'm just in there for 5 years, my lease is up, and I plan to do something else after that. The risk here for the tenant is that if they weren't planning to relocate, well, now they most likely will relocate if there are no other parties offering on the property, which is not likely. And then I would have to renegotiate my terms from scratch. So sometimes that could be a little bit more challenging than if you already had all your terms in place and now you're just signing for a renewal period. This is common in commercial real estate. Each year, your base rent will increase 3%. So don't be shocked if you see that in the LOI. Number 2, term with 1 renewal. So the example here is a 5-year initial term period and a 5-year renewal option. So it's a benefit for the tenant because they have the security of being in there for a longer period of time. And then usually at the at the renewal period, the rate will be fair market rent. and that will be, you can negotiate on that at that time as well. Number three, multiple renewal options. So that means you have an initial term and then one renewal period and then another renewal period. So this example here says 5-year initial term and then 2 5-year renewal periods. So then you have a 5-year renewal period and then another 5-year renewal period. So the total time that a tenant could occupy this spaces if they took both renewal periods would be 15 years. That's flexibility for the tenant because they can get to decide if they want to renew. Say business is going great. After the 5th year, they renew for 5 years. Business is getting even better. Great. They'll renew for another 5 years and be there for 15 years. Short term with frequent renewals, example number 4. So you have, it's kind of like the same one as number 3, just they're using different numbers. So 3-year initial term and 3 2-year renewals. So these renewal periods are a lot shorter. Maybe you have a growing business, but you need a lot of flexibility. Maybe you want to expand to another location, but you're kind of just watching the market right now, as a lot of people are doing in Jacksonville. But you have, in this case, you'd have more frequent rent renegotiations. So that could kind of be a pain if you have a lot of small renewal periods versus just doing larger renewal periods up front. And then key considerations, um, renewal options, you can exercise them, but you don't have to. So, for example, if I have 5 years with one 5-year option to renew, I don't have to take that 5-year option to renew. It's just kind of like security for me that I can be back in this space um, if I wanted to. And then all the other stuff is pretty self-explanatory. Uh, Make sure you plan for your business. Each business has different needs, right? If you are planning, I mean, I hope if you have a business, you'd be planning to be in business for a long time. So having longer terms provides more stability. Having shorter terms provides more flexibility. So, for example, if I am a first time business owner and I'm opening a gym and I want to open a gym at the beaches. But I know that downtown Jacksonville is blowing up and that the Pearl Square project has $2 billion committed to it by 3 major capital groups and other investors. And all these things are happening downtown. So maybe I don't want to be at the beaches for that long. Maybe I want a shorter term to start. And then maybe I want to move to a different area as I see different areas growing, or expand and open a second location. And then these are some sources. If you're not familiar with these websites, if you're looking for a commercial purchase or to value a property, or you're looking for a commercial lease, or looking just to see what economic activity is going on in Jacksonville, then some of these are great tools to use. The DIA, the Downtown Investment Authority, they're always putting news out on their websites. County and city websites, that they have like the economic development tab on there. In any county or city website, you'll find that. CoStar costs money to use. Crexi is free. LoopNet is free. You can search properties on there and see how much they are leasing for or how much they are selling for. The MLS, if you're a realtor or you have a real estate agent license, you can use the MLS, or if you pay the fee for it, you can use the MLS. Trading Economics is a free website. It just pretty much tells you all of the different economic activity that's going on. Pretty much anywhere in the world, you can put it down to the city, and I think even zip code. Publications, the Jacksonville Business Journal is a great one. They're always putting out great news about what's happening in the city. Develop Jacks is another one. Build Up Jacks, and there's a ton more. These are just a few examples. And then Jacksonville's growing economy. So I have lived here for pretty much half my life, I would say. I grew up here and then I went to college in South Florida and ended up staying there for a long time and then opening a business there. And then I recently have moved back a couple years ago, and if you grew up here in Jacksonville to now, it's a lot different, right? And it's an exciting thing to see. And I know that every couple years we have, the city people saying, we're going to do this and we're going to make this better and we're going to improve the roads and we're going to add all these different things and bring all this money to downtown. And it's kind of just, falling off a cliff every couple years. But so being someone that's working in downtown. I'm there every day on Forsyth and North Market Street. There every day, and I'm seeing cranes and buildings go up, and it's a very exciting time. A lot of people are moving to Jacksonville, and I think it truly is a good place not only to start a business, but the quality of life. It's affordable. If you have a family, it's a great place to raise a family. So I'm a huge Jacksonville fan, and that's coming from someone that was not born in this country and has traveled to all sorts of different countries and states as well. And this is a chart from Wallet Hub. They were doing best cities to start a business, and Jacksonville ranked on their number four as their number four. And that's pretty much it. I will put this link in the chat if you guys need it. It's a new commercial tenant form. It's simple. I think it's maybe less than 10 questions. If there's someone that's looking to lease commercial real estate, I send them that form, and it's very easy for me to look at exactly what they need, and I can just plug it into our system and see what's available. So that's it. I don't know if you guys